Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Hello and welcome to Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel and with me we have a new look Bazaar today. Ekta and Mangalam join in as well. Good morning guys. Halfway through the week. Interesting times ahead.
Interesting times ahead. It was interesting times yesterday and day before as well. So many things happening, yet nothing happening, yet so many things happening. I mean, it's the middle of the week. You want it to be a Friday.
Indeed. And Ekta, good to have you on the show.
Hi guys. Yes, absolutely. It's great to be on the show and a lot of nothing happening, but it's better than what was happening a couple of weeks ago for the markets. So definitely from that perspective. But the FII sell figure was quite worrying, I would say.
Well, that's right. We'll keep an eye at Mangalam on the markets and also an eye on Wankhede this evening. Hopefully we don't get some rain and hopefully Mumbai can pull up the win. I guess you're going to be at the stadium.
I won't be at the stadium today because it's raining and you don't know, the uncertainty that there is. But be that as it may, if you just look at the market yesterday, some of the portfolios, while we're watching out the Battle of the Blues today, which is the Mumbai and the Delhi teams, it's the battle of the Reds in the markets yesterday. If you look at both the Nifty as well as the Nifty Bank, there was a sharp pullback that we saw in yesterday's trading session. But your portfolios would have hurt because earlier when the Nifty and the Nifty Bank were consolidating, the frontline indices were consolidating, we had the broader markets outperform. But yesterday it was the broader markets which underperformed. We had the mid-cap as well as the next 50 indices down almost 2%. The possible reasons for decline, you club it in three broad buckets. One, concerns around the US economy. Second, China interest rate cut, which may direct flows to China. And the third part is fear of rising COVID cases. We saw the IT index underperform yesterday. We saw the metals outperform yesterday. So those two played out. If it's the third, then we'll have to watch out for two pockets today, the hospitality stocks as well as the diagnostic companies, because those are the ones that rose earlier as well. But the one number that defined the market action yesterday came post-market. That was the FII flows, 10,000 crores worth selling. We were looking for cues, whether it is a one-off, whether it was a large trade. Seems like none of that. It is a 10,000 crore selling that the FIs have done and is the largest that we've seen all the way since February 28, 2025. In that, we have to watch out for levels. The Nifty Bank below the 20-day moving average. The last time it did bounce from those levels. And the Nifty 20-day moving average is 24,500, which may be an important support. We'll watch out for all those levels. Nigel will talk about the FNOQs as well. But I'm just looking at a couple of other important macros overnight as well. Wall Street saw a decline of anywhere between 0.3 to 0.4%. Dollar index cooled off a mild bit to sub 100. Brent has been rising. Over the last few trading sessions, it's actually rallied all the way up 10% to 66.5. And gold continues to be around that 33 as well, $3,300 per ounce. While there was a decline on Wall Street yesterday, I will keep an eye out on how Nasdaq performs today. Why do I say that? Because there were big launches that came in from Google's summit where they've launched VO3, an AI video generator, which also creates audio. So it's one step ahead of the one launched by OpenAI. And it's also announced a $250 per month premium AI subscription plan. So take us for that. Could keep the Google Alphabet stock in focus today. And a whole host of other Nasdaq stocks that I'll be watching out for will be Tesla, Nvidia, and AMD. Why? Because Musk has said he will spend a lot less on future campaign donations, which is positive for Tesla. And secondly, we'll continue buying chips from Nvidia and AMD. That's positive for these chip makers. So while Nasdaq was down overnight, I'll watch out for how it performs today. But by and large, what was the dominant factor for the market in yesterday's decline is something that we'll find out today. The traction on hospitality and diagnostic stocks will be crucial. But Nigel, a lot took place in the flow side as well.
Well, that's right. First up, in terms of that FI big net sell number, I am not yet worried about that because yesterday it appeared that, in fact, there was a risk-off that played out. And that could be a case where the US yields spiked up. So there was money that was flowing to treasuries rather than equities. So I'll guess that, in fact, the sell-off that we saw in the Indian markets could be part of the emerging market sell-off. We'll have to wait by to see how that plays out. And also, we have the monthly expiry that plays out next week. So hopefully that's not a change in trend and hopefully you're not going to see a big FI net sell number. What do the FIs do in the index futures though? They added some short positions. So they added close to 5,000 short contracts and they unwound 9,000 long contracts, which tells you why we had the short positioning that moved up from around 24,000 contracts. It's moved to around 39,000 contracts or thereabouts. Some shorts in the system, not such a bad thing as I always say. What about the clients? Well, in yesterday's trading session, they went ahead and they added some longs as well. So you just look at the long addition, they added closer on 25,000 net long contracts in trade yesterday. Moving to the FI data, though, in the stock futures, they added some mild shorts, they unwound some longs as well, and we've seen this over the last few trading sessions. So that's about what the FI as well as the clients are doing in the FNO market. But I'm not yet worried because of a couple of factors, and I believe that maybe at some point of time today, we see a bounce from the lows of the day. The reason I'm giving you, yesterday the Nifty was down 260 points. Yeah, it has an inverse relation with the volatility index, but yesterday we didn't see a big move on the volatility index, and that's normally the fear index. So, that's one point that I'm looking at. The second point is on the PCR. Just a few trading sessions ago, the PCR had moved to around 1.3. From around 1.3, it's come to the lower end of the band at sub 0.7. Normally, we see at around that 0.65 odd, we see the Nifty bounce a little bit. So I'll be keeping an eye on that parameter. The VIX not spiking up and the PCR at the lower end of the range give the bulls some kind of hope. Though, in fact, we should look at the options data. And the reason that the PCR came down, because the call writers, they feel they're back in the game. 24,800 call, 25,000 call, both of them added a good amount of open interest yesterday. However, there was some addition at around the 24,500 odd mark. So in terms of levels that I'm looking at, going by this option data, that's the 24,500 put seeing some writing. The 20 DMA as well comes in around that. This is the crucial support, 24,450 near-term support. You don't want this to break. On the upside, we've been seeing for the last few trading sessions that the 25,000, 25,125, that's a bit of a resistance zone. Moving to the Nifty Bank, well, that one as well will be important. It needs to defend the lows that we saw last week. I don't want to see this level getting violated, 54,400 odd. So I expect a bit of a bounce from the lows of the day, and hopefully the FI net sell number doesn't pick up. In terms of stocks that I'm looking at Aegis Logistics. There is, that expectation of them unlocking some value via an IPO of one of their joint ventures that they have. So the company will get some money. And the last few trading sessions, actually, the stock has been quite strong. And it's been backed by good amount of delivery-based buying. In January, it was a 1,000 rupee stock. It corrected a fair bit, and now it's seeing some good delivery-based buying. Just take a look at that. Yesterday's trading session closed on 2.4 crore shares getting delivered, which is much higher than the 10-day average and much higher than the 1-month average as well. So that's a stock that I'll track, guys.
Okay, all right, Nigel. Thanks very much for that. So yes, definitely the FII flows is something that we will be watching. But besides that, just wanted to touch upon a couple of macro data points. The core sector data for the month of April was actually quite weak. It came in at around 0.5%, which was an 8-month low. Remember that it's 40% of the IIP. So the street is probably now anticipating that the IIP figure for the month of April could be around just about 1%. In terms of a couple of other cues, the earnings season. So we have Indices Bank, which is coming out with numbers today. That's important to watch out for. Besides that, we have ONGC as well as Colgate. So those are a couple of key points to watch out for in terms of results. Separately, I think I would keep my eye out on what's going on with Israel and Iran in terms of the Brent crude prices. Right now, not seen a huge rise, but nonetheless, the situation between those two countries would be something that we should keep on our radar. And separately, India-US trade negotiations, where that is heading, I think that would be an important cue. But some relief because the southwest monsoon is expected to hit Kerala 1 week early. This is the first time in 16 years, Mangalam, that's going to take place. It's a big relief, I think, to all of us.
It's a big relief for a lot of us, but we'll have to watch out for the implications of this on the agri and more importantly, all the AC sellers. They were bracing for a very hot summer. All the summer companies, were expecting good offtake this time around because summer had set in early. But now if monsoons are coming early as well, so all these, inventories that have been piled up at those stores, let's see whether they sell or not. But let's get in some equity call. We have Ridham Desai of Morgan Stanley saying that the drawdown in Indian stocks from their September 2024 highs is actually an opportunity to buy India's long-term story. He says they raised their EPS estimates by 1% to reflect the GDP growth forecast upgrade. He also says their sensex target, the new sensex target for June 2026 is 89,000, bakes in their new earnings estimates. Also roll forward from the December 2025 target of 82,000. So 89,000 was the sensex from the House of Morgan Stanley. Them also add they are overweight on financials, consumer discretionary, industrials, and they are underweight on energy, materials, utilities, and healthcare. He says it's likely to be a stock picker's market in contrast to one driven by top-down or macro factors since the COVID pandemic.